Morning. This is Mornings with Michael for information and educational purposes only. Happy Sunday, everybody. This is a weekend update. Right now, we're just taking a look at advanced decline line on both the Amex, which is trending down, and the NASDAQ, which is trending up. But as we can see here, this is kind of the advanced decline line is kind of trending down right here. So that's the story with that one. Let's go take a look at the New York Stock Exchange. Their line, this is the Dow Jones. Seems like it's trending down there. And the S&P 500. And it's maybe trending slightly up to flat. And the advanced decline line is right about the same. The S&P 500, I think, I'm not sure if this is equal weighted or not, but I think possibly the big cap 7 could be leading this. So that's kind of the story there. So without further ado, let's just take a look where things left off over the weekend. Go to our S&P 500 heat map. Make sure that we got the latest one. Just refresh the screen. And there we go. So we kind of had a mixed bag on Friday. We got a lot of red there. A lot of red. It's almost, yeah, I think we got a little bit more red than green. So that is kind of the story there. We'll try to break down to see what's under the covers of the S&P 500 in the different sectors a little later. That's the story there. If you're worried about your hard-earned retirement money that you spent a lifetime building up, you might want to consider this annuity. It always goes up in value, does not come down. Goes up when the market goes up, and when the market goes down, it stays right there. So it beats index investing by about 5% per year, 12.58 versus 7.57. And you don't want to turn your 401k into a 201k. This happened in 2008 when the markets melted down 54%. So if you want to learn more about that, feel free to reach out to me. And that is the story there. And now let's go to our PowerPoint presentation. Start out with our word of the day. Our word of the day is percipient. Having a good understanding of things perspective. As a percipient, she was often the first to notice when emotions were running high. So that is percipient. Bring up this chart. This is the 4 phases of an economic cycle. You have the expansion, you have the peak, you have the contraction, and then you have the recovery. My question to you is, where do you think we are now? So that is the story right there. This is from Investors Business Daily. Looking back at the follow-through days and beyond, we had a follow-through day in November. This was right about here, November of 2023. And we look back at 2003 and 2009 at their follow-through days and just kind of see where we are. So that had a kind of a sell-off over here. We had our sell-off at 8%. 7.6% in 2003 and 8.1% in 2009. And this is where these units took off. Had a big sell-off down here, and same thing in March of 2004. So where will we go from here? That is the question. Right now, I think we're climbing a wall of worry, which we'll look at in a few moments. We have a lot of worry in the economic picture. This is the S&P 500 component correlation. When there's a low correlation, that means there's complacency in the market. People are not taking into effect of things that are happening, and they just think things are going to be rosy and keep going. When there's a higher correlation, it's closer to a panic. So this is our 3 waves down, which happened. And not sure if that's when the breakout happened. No, that definitely wasn't the breakout, but this is a big panic. I believe this was in 2008, 2009 area. And this is probably 2022 to 2023. And this is where we are now. So that is the story there. Let's take a look at our Dow Jones Industrial Average. We had a pullback right here, 379.61, got pretty close to that, and then a bounce. And we got a doji here, which needs more information. And then almost like looks like an inverted hammer coming down here, which is a possibility. And it did bounce from that. So we'll just see if it can go up a little higher, and really think that this moving average is going to prevent it from going too much higher, and that our target is to come back down here to 379.61. Right now it is both the stochastics and the CCI are raising, but we got a little angle on the stochastics here, and we'll see if that portends to it turning back down. So that's the Dow Jones, which has been a pretty laggard index. IWM been bouncing. We know, been talking about this several times, that it has not been able to make a new high in over 2.5 years. So it came through its moving average and pulled back, hit our target right over, hit the target right over here, and bounced, came back up to close to the moving average, and now it's pulling back. Target right now is 198.95. We're right at the lows on the stochastics, and it's turning down on the CCI. So that's the story there. A lot of that was, this pullback was hinged by rising interest rates and the bond yields. So that's still going to be a problem for the small capitalization index. And this is a NASDAQ, or the QQQ. It pulled back here, hit the target, and then it's bounced. And it came up here. Looks like we got a doji here, 2 dojis in a row almost. Or maybe a half pivot. Needs more information to tell really which direction it's going. I think it's a good possibility we have a pullback in the morning on Monday. We'll have to wait and see. This is the target right here. Get pretty close to our moving average right here. So we had a little increase in selling on Friday towards the end. Stochastics are moving up, but it looks like we got a little bit of a hinge, and we definitely got a hinge on the CCI. So that is NASDAQ, the strongest index right at the moment. S&P isn't too far behind. You can see some similarities. Kind of hit our targets right here, came back to the moving average, and then bounced. We got kind of a bullish signal right here, and then we had a big pullback on the following day. This is very similar to what we saw in the Dow Jones Industrial Average. I think it's going to pull back pretty close to the moving average here. We do got an increase in buying on Friday. The stochastics are moving up, and we got a hinge on the CCI. So that is the story there. A lot of this is going to, many people feel that NVIDIA may be pulling back after having its big 10-for-1 split. So we'll have to watch that. NVIDIA kind of is the market at the moment. Everything kind of follows with NVIDIA. This is the VIX, or volatility index. we're pretending a pullback here not really happen. And it kind of bounced and got a gap up here, came through, we filled the gap. This is an oscillating index, and 99.95% of the gaps will fill at some point or another. So came down here. Right now we got a stale red light. What is a stale red light? That means a number of red days in a row. 1, 2, 3, 4, 5, 6, 7. And that is a huge number. We had a number of red lights here, and then we had the green, and then back to red, and then green popped up here. So not sure what day it'll happen, but at some point this is going to bounce, and it's inversely correlated to the S&P 500, so the S&P 500 would pull back at that point. So that's a look at our indexes. This is silver. On the strong dollar, the silver pulled back, a big gap down. It looks like got close to filling this gap over here. And we have one gap over down here and over here. Often works as a magnet to pull it back. So we had a $23 price target over here, and think that is where it possibly could pull back, filling both of these gaps. So we got a hinge on the stochastics and hinge and downturn on the CCI. We got a higher volume selling, so those are all bearish, and we got a bearish Harami right up here. So that is the story with those indexes and silver. We'll take a look at Bitcoin a little later. Before we go any further, it was a pleasure to go to Atlas Studios Bay Area. If you want to have some good family photos, special occurrence photos, can't imagine anybody having better ways to photograph and bring out the beauty of everybody in a picture. And it's great little studio off of Camden Avenue in San Jose. So feel free to reach out to them. So that's our little shout out. And we're going to pull up. So Bitcoin and Ethereum have been kind of bouncing around. We'll take a look, see if we can bring them up here in a little bit. But let's continue on with our PowerPoint. So this is kind of the evolution of Atlanta Fed GDP, now real GDP estimate for 2024. Thank John Najarian for sharing this on her Twitter feed of Market Rebellion. Atlanta Fed GDP now estimate is definitely falling. Range of top 10 and bottom 10 average forecast, definitely pulling back pretty strong there. This was a slide we showed last week, but I kind of think it portends to some of the slides we got coming after this. It just shows the unrealized losses on investment securities in a number of the smaller banks. Look at how these are looking. I snuck this in here. This is euphoria meter. Euphoria seems to be kind of at an all-time high. At one point, we were expecting 7 rate cuts this year, and more it's looking to be less than 1 or less. So that is a story. Here we got the sticky price of the CPI and inflation. Just keeps going up and up, and it is liking to stay there. So forget us off. This is something we showed a couple of weeks ago, but I think it's similar because the Kobisi letter we're going to show in a second. All the data says the economy is strong, while all of these companies are reporting losses or falling down with declining traffic or business. Starbucks fell 20%. Shopify fell 20%. Netflix fell 10%. They've recovered since then, but Etsy fell 11%. eBay fell 5%. Is the economy really that strong? So here's the other recent Kobisi letter. U.S. economy now has 63 banks on the brink of default, according to the FDIC. Over 500 billion of paper losses held by banks, as we saw in the chart earlier. Declining GDP growth with rising inflation. Over 50% of Americans believe we are in a recession. We have the lowest mortgage demand in over 30 years, a record 17.7 trillion in total household debt. How is this soft landing going? Now, this is breaking. Job openings just have seen a sharp move down today. This kind of steep declining has only been seen 3 times since 2000. All 3 ended in a sharp economic downturn. This is the Federal Reserve chart right here, 3-month moving average of unassigned median hourly wage growth overall is falling, and consumer price index for all urban consumer all items less food and energy by city average, so that is falling as well. Now this is employment level by native born, which is a blue term, the blue line, and foreign born from January 2007 had a huge drop here, and then just look at all the foreign born who are taking all of these jobs. Now, what kind of jobs are they? How is this? Zero Hedge says, how is this not the biggest political talking point right now? Since October 2019, native-born U.S. workers have lost 1.4 million jobs. Over the same period, foreign-born workers have gained 3 million jobs. And what kind of jobs are they? Well, this is the job changes. Full-time employment has dropped in this red bar right here, and then this is all the part-time workers. As we can see, May full-time versus part-time. Full-time falling negative 625, and part-time positive 286. And then this chart I showed a couple of weeks ago, but quite interesting. Public debt for every American. Every child born in 2024 is $82,590. At age 18, $143,964. And by the time they get to 30, $209,707. So that is our PowerPoint presentation. Let's go over to our charts. As we said, market oftentimes climbs a wall of worry. Let's just stop the share for a minute and go over to our Bitcoin charts. Few people are saying that they don't quite believe the jobs report, feel like it was manipulated in some way, show better numbers than possible. And most of those jobs were part-time workers, they weren't full-time. So those numbers are being analyzed right now. So this is Bitcoin. This is Bitcoin right now. It had gone down to 60, I believe it was at some point on Friday, it had gone down to 68,500. Sure, it'll show the low. Yes, 68,908. And it's just been kind of climbing since then, bouncing around. Is this a shakeout? try to get lower prices for some of the wealthier holders. That is a big question. AJ Monty had thought it might pull back to 64,000 and then make new highs, but we'll just have to keep eyes open. This is Ethereum's price and a strong pullback as well. Fell off the shelf. It'll be a shakeout +3 is what we talk about in the stock market. So we'll just have to wait and see how Monday and Tuesday bring for the cryptocurrency markets. I'm not sure if I really shared that. Let me just go back here. There we go. So that is the story. Let me stop the share here. Not sure what happened there. It logged me off temporarily. Let's go back to our screens. We're just going to take a look at what's kind of heating up. I'm just going to pull that up on my little device here. So these are some of the companies that are kind of basing, getting pretty close to breaking out. This one we bought at, I believe it was 111, and we sold it at somewhere in here. We're right around 115. Pulling back, and we may get back into it depending on how it looks. We got a IPO base that broke out in hot shoes area. Birkenstock. Look at the surge on earnings. It's pulling back a little bit, so pulling back pretty close to the pivot area. So we'll see if that be a breakout as well. We got Booz Allen Hamilton. It's right in the pivot area. And this kind of consolidation right over here, broke out, pulled back to the 20-day, hung out around the 20-day, and it's pulled back again to the 20-day. So we'll see what happens with that one next week. One that we currently hold and we've been talking a lot about. Dutch Brothers, I guess it costs about $30,000 to have a franchise in this. I was kind of looking at their paperwork. You pay a 5% royalty once you have the franchise, and you need about 150 to 500,000 in liquid cash to when you're operating one of these. So that is kind of the story there. About right over here, moved on up, gapped up, pulled back to 20-day, and we had our stop somewhere in here. And then we bought back at 34.55. And then we had 3 op. We sold one of them at 126% profit. So that's where we are with Dutch Brothers Coffee. Eli Lilly. Many people feel that this should be a part of the, or will be a part of the $1 trillion club pretty soon. They just broke out over here, and they just keep trending higher. Fabrinet. and it broke out, pulled back to the 10-day, gapped up, came back down, filled that gap, and now has moved down to the 20-day. EPS, or earnings per share, is supposed to grow 5% this year and 15% next year. They had earnings beat, went up 23%, the last earnings report. And they don't report again until August 19th. So that is the story with Fabrinet. Bear Isaac reports on your FICO score. Looks like we got a double bottom here. 1105.65 was low. So 1307.98 would be the middle of the double bottom. So it broke out right over here. Went up to a 145.78. Now is pulled below. It's 20-day and it's kind of consolidating right around there. Intuitive Surgical. It broke out right here. That was on the 24th of May. Pulled back to its 10-day, kind of been bouncing around, and then had a pretty nice move right there on the 5th. Pulled back on the 6th and bounced right back where it was. So when I pulled back to the 10-day, I guess that would have been your chance to buy it. And that is Intuitive Surgical. Caspi. Put in the wrong symbol. This is a Kazakhstan-based company that provides payments for the marketplace and fintech solutions for both customers and merchants. This is the IPO base right over here. Broke out right over here on the IPO base, has really never looked back. Now it's kind of consolidating, pulled back to the 50-day moving average right there, and has just been riding pretty close to the 50-day. Broke above it here. And this would be the pure pivot. Also draw the line right here. Right here gets you pretty close to the same kind of move. Broke out right over here. You could possibly add it if it gets to the true pivot at 136.27. Carzoon, I believe this is a Chinese company, a Chinese-based provider of mobile app, Boss Zippin, to connect job seekers and enterprises efficiently. Broke out over here, pulled back to the 20-day, and that was bouncing. Got pretty close to the 10-20-day demarcation right there. Let's see where that takes it. Netflix, as we were talking about earlier, had a bad break on its earnings and has been recovering pretty strongly. Even though Meta is in this list, we'll take a look at it because it's very similar to Netflix. Had the bad break on earnings, and it's just been getting support ever since then. Draw that line. This would have been breakout above that area. We had a 475 short on the family accounts that we're managing. We bought all those back. Pulled right through here. So that is the story with Meta. Palomar, found this when we were doing our scanning. provide specialty property and personal commercial specialty property insurance. So we've got this pullback to 74.09. If you just go to the Darvis box theory of trading, this is where it leads you. We had a breakout and then breakout and fake out. So it breaks out, try to search higher, and then it pulls back below its 50-day, tries to get back there, and then look at this. Comes right back, and now it's right back in the pivot area. So that is Palomar Holdings. Earnings are supposed to be up 23% this year and another 18% next year. Moving on to PDD and Duo. Ireland provider of third-party mobile e-commerce platforms for buyers with merchandise shopping experience. So we got a double bottom here. The low was 108.87. The middle was 139.06. 139.016 would have been the buy point. And then it sold off again. So you would have been shaken out. This is the first time it cleared above the 50-day moving average, pulled back again, and this might have been the buy area right here. So you got shaken out here. You could have bought back here, and it has been bouncing around, but it has been moving mainly up. Broke out right over here into the pivot, surge, got pretty close to the profit-taking zone, and then it's pulled back to the 20-day right here. Pinterest. Got a 41.60. Was oscillating back and forth in kind of this Darvis box. Big move up here on earnings. Earnings were up 150%, 48% earnings surprise. And then it got to the pivot, pulled back a little bit, pulled back to the 20-day right here. And now it's just been surging. You can see the blue bars here. This is the highest volume since this base. Although it looked like the highest volume was actually on the earnings day. And trade desk. Just opened a position in the trade desk this last week. Went into the pivot here. Pulled back a couple of days to the 20-day. Kind of sliced through the 10-day here. So we'll just have to see where this goes. The earnings were up 13%. This is the #1 self-service platform for ad buyers or marketing their business. And TradeWeb markets broke out right over here, and now it's had a strong pullback below the 50-day moving average. Normally a lot of people like to put their stops at the 20-day, so maybe you pulled out of this one. Some people like to buy in pullbacks, so would need to bounce off the 50-day moving average for that kind of buying. So we'll continue to watch that. And finally, Western Digital. Western Digital, looks like we get an ascending base. Broke out of this base, came up here, and a little sell-off. Broke out of this base right here. Pulled back. Broke into this new base. Short little consolidation right here, broke out again. And now we're just consolidating the cup with a handle formation. came down to the 50-day bounce and has been riding the 20-day ever since. Trying to break out here, but it's pulled back to the 10-day. Earnings are up 64% this year and 628% next year. That is just incredible. So that's a look at companies that are close to the breakout. Let's take a look at some recent IPOs. We had opened a position in BOW, casualty and professional liability products, over 7 billion in policyholder. We'll just see if this can break out of this IPO base. 6, 7, 8, 9, 10, 11. May have bought a little early. We'll just have to see. IPO bases are 16 to 25 days in length. Let's see if we can bring up this other IPO that has done pretty successful. Let's see, when did this IPO? I guess this was 2014. Right over here, kind of gapped up. We'll see if it can fill that gap or if it's going to just stay right above here. On our gap up rule, we would have gotten out of this because you go up to the gap up, and if it pulls back under the gap up, then you just get out of it. So we'll see where this one goes. Serve, continue to watch. We had been in this, got out at around 270. This is definitely, this is definitely past the 16 to 25 days. So we're kind of looking for first institutional base. I think it needs to clear this area before it would be close to a buy. So that is serve. Lower. Lower holdings. And its IPO base here broke out, pulled back, and now it's continuing right up. So this is performing well. This is in our portfolio. Take a look at some of the other things that we're currently trading. Lift, tried to lift up here, got turned away at its 50-day, tried to do the same thing the next day, and it got turned away as well. So they had some good news, but people sold on the news. We do have a covered call at 20 here, so we'll see. Kind of watch this for a few days. May not let this go too much further down. Denison Mines in the uranium area. Pull back to the cursor over here. Pull back through the 50-day at around 210. We bought this 194, and we sold a bunch of covered calls at 250. We're starting to wonder when it got up here to 246, but that's a nice pullback. Those covered calls don't expire until July. So let's just continue on our review. We looked at Brothers, Elf Beauty, had options at 160, bounce here, I believe it came right above 200. Now it's pulled back to its 20-day moving average. So we want to make sure that it holds through this gap up area. I guess that's right around the 170.44. So If it does not hold up through there, we'll be out at that point. And aviation area, aeronautics, AeroVironment, it's riding the 10-day moving average. Probably not doing anything, that one at the moment. And FTAI. Pull back to the 10-day. We're just kind of holding that one. And Howmet, we sold, I think it was last Monday or Tuesday, as it kind of got into this profit zone. InTap, it's kind of in the AI support area, computer data storage. And it's bouncing off of the 10-day moving average. CrowdStrike is really the leader in cyber security. Got a cup with a handle going here, pulled back. A strong reaction to earnings, but we're up 63%. Let's see if it can get to the pivot area. Kaba Mediterranean Foods, we had kind of foreseen this pullback here. Didn't really get in at our price for the covered calls. So we'll continue to watch that. So let's go take a look at some of the other areas in the S&P 500, the ETFs. So this is the financial sector kind of holding at the 50-day moving average, oscillating back and forth. This is the box area. Flat base needs to get to 42.59 for a bounce. Take a look at oil pricing. Only slice through the 200-day moving average. Not too much good happens below the 200. Take a look at energy pricing. Yeah, it's pulled back quite a bit here. People are kind of expecting a bounce, but we'll have to see how next week rolls out. Communications area, AT&T, Google, Facebook has been one of the strongest sectors, pulled back right over here, and it kind of broke out right these 2 days right here, and then has gapped up and continued in a pretty good fashion. Utilities, they had been rising, kind of broke out right above the 200 here and just kept trending higher. Had a pullback right here to the 50-day bounce. This would have been a great day to add if you had been in here, and it just continued rising. Utilities are taking on a bigger role in data centers with the AI push. So that's the story there. Real estate had been doing well until the rates really bounced. We tried to fight back toward the end. So this is infrastructure, had been a leading sector here, came up here, pulled back, and now it's just kind of oscillating within that box. Semiconductors really have been leading here, kind of oscillating within this box, and then just bounced here. So right now they're above the kind of the buy point. Airlines kind of pulling back under all the major moving average, got into this red box, which is sell area. leisure activity. Had bounced here and is pulling back, and it fell to the sell area around the 200-day moving average, and then has bounced a little bit. Building materials. Tried to bounce here and still haven't cleared this breakout area of the box, so we'll just see how that continues. Home builders. When the rates bounce, they really sold off right here and continued the sell-off. They really need rates to come down. Metals and mining. They had a nice bounce here, but with the strength of the dollar, they really sold on Friday. So that's the story there. This is the healthcare sector, which has kind of been trending up for a long time. Came up here, pulled back, and look at all these days in a row. 1, 2, 3, 4, 6, 7. You could say this could be like a stale green light, and you'd be expecting a pullback any day here. This is consumer staples. Tried to break up here, had a pullback to the 50, now is bouncing. So that is kind of a look at under the covers of the S&P 500. This has been Mornings with Michael, our weekend update. Appreciate you tuning in. Hope everybody has had a great weekend. Continue going out there working on your goals and your activity, and keep helping one another so we can make this a better world for everybody to live in. And we shall see you next week.